Well, hello again. Let's do a little talk about thrust, which I think is definitely a key concept that you want to grasp when you're a trader. Um, let's see if we can't go find some nice examples and some counter examples, because in trading there's never any set rules. There's going to be some times where you can go, wow, look at those bars, and I don't want to fight that. And there's going to be other times when you're going to go, wow, look at those bars. Maybe I don't want to step in front of that train, but I really don't think I need to be jumping in either direction. And there's going to be some times when you're going to see some thrust that just immediately dies and craters back in on itself, and that's a good indication that you should trade against it. So let's go take a look at a few charts and see what we can find. Let's go back down to my 19-minute chart so we can get everything nice and clean. Start of this move in the Australian dollar is probably pretty indicative. Let's see if we can't find some nice thrusting bars that from breaking out. So let's take a look at the first time we had thrust up. So here we're in January and we're still in a downtrend that's been lasting from the other year. And you know, we'll print a couple big bars up like this as we're retracing, and then when we're done retracing, we'll start walking our way down here, and then here's a nice example of a thrust bar. Great big huge volatility compared to everything else that's going on around it. Definitely a sign that you don't want to be fighting this unless you got some sort of major support that you were coming into here. Here, there's still nothing. We're just trading on down into new territory. So we really can't. We definitely don't want to fight this. Doesn't mean we necessarily want to go jumping on the very first little retrace that we see either. But always something to step up and take a look at. Now, so here, after a little bit of a retrace, we come down. We have another kind of thrusty looking bar, but really not all that huge compared to everything else. What really should wake you up and make you pay attention is when you have this kind of swing high, because here's the lowest low and here's the highest high before that, and you have a big thrust bar, and then we come out and take that out. Definitely pay attention as that being a possible sign of new trend, especially if we are breaking out of something like this. Now this big blocky coiling pattern where we're not really making any new lows, or just going sideways for a while. We go sideways for a whole week, and then we break out of that. So this has got traders built up in it that were short looking for more ways down, and now they've got to get out of the market, and that will support the market as we come higher and higher, as those guys need to protect their positions. So right here, nice new thrust, breaking out of a range and then continuing on higher to take some highs out. Watch out when you see that. Don't go pretending to be stubborn and ignore that, because you're going to end up getting burnt. You need to wake up and pay attention when you see thrust in a new direction after a nice consolidation pattern like this. It can really lead to a large new trend. And in fact, finding the first major and significant pullback after that is a large part of this game. This is the first time that you could have drawn a channel off the highest high that was broken, and maybe you slap a sliding parallel in here over the middle of the channel. And think about buying in here. That's a little scary, but here's your stop. You know, even if you did buy in here. Your stop is very obvious, and plus these retraces are coming back to the end of this thrust, which we like to see, and then it just can't get any further down in there. There's enough guys that were trapped by this move that they're going to be looking to close their positions out as small a loss as possible. So let's make that stop like it's supposed to say. So this is an hourly chart that's risking about 40 pips, and you'd be looking to make at least this. It didn't quite work out this time. Didn't get to the median, but you would have more than likely tightened your stop up there. Still got some money out of it. Alright, so the point being that coil thrust in a new direction is something that should catch your attention, especially when a swing high gets taken out. Now we had another swing high up here, and that's what eventually slowed price down and caused an even larger coil. I know this is kind of scrunched up. Let's actually delete all this. An even bigger coil. Now here's the other thing we want to talk about. You're in the middle of this big range, and you see thrust like this. What's that look like back here? Well, here you might not be sure that you're in the range yet. However, it's a big thrust down, and we take out some of these swings, but we don't get down here below these pokes and into this old range, or anywhere near our old, I like to look at these old origins of thrust. Point of ignition, I think Shane called them. I like that term. We don't get back down into there at all. So we start putting in a range. Maybe this thrust bar isn't quite so clear, but do you want to get all excited about this one? No, you're very clearly in the middle of a range there, even if you're just looking at it as it's forming on the hard right edge. And we don't even make it down to a simple median line target off of that, or break this swing low. We do here. Scrunch it up a bit more so we can see the range, and then we come down and we kind of, we basically fake out taking this big consolidation pattern to the downside, and then rather than continuing our downtrend, we find buyers down here at these lows and these points of ignition, and then we start climbing our way up. We come back through the apex of the triangle, get some more thrust in here. We get some more thrust in the other direction. So overall, we're getting guys trapped on both sides. We're thrust up, thrust down. What's the key? Well, you're in the middle of a range, so you pay less attention to thrust unless it has put you on the edge of a range, where you could potentially make a trade with a small stop to go to the other side of the range. So that's the rule. You're in a trend and you see thrust with the trend, then don't fight it. if you are near the potential end of a trend and you're coiled for a little bit and you see thrust against the trend that takes out several swing highs or swing lows that are against the old trend, then wake up and pay attention. And while you may not have a sign that a brand new trend is beginning in the opposite direction, but you definitely want to make sure that you've protected any profits that you had if you were following that trend, the old trend, and to make sure that you're not initiating trades for a continuation of that trend without some pretty massive evidence that that thrust died out and failed. So that's the last thing we want to talk about. So thrust in the middle of a range, don't, as always, don't play in the middle of the range. You play on the edges. Thrust that dies and fails is a good indication that the first thrust was wrong and that we need to go in the other direction. And you can call that a railroad track, or maybe, what's another name for it? Kevin Haggerty called them, well, not in a thrust context, but kings and queens, basically one big bear bar and one big bull bar that more or less retrace their whole distance. Might take a second to find one of those. I may have to come back with a new example and do another, just a quick recording of that, so we don't have to watch me scrolling through all this the whole time. Yeah, I think we may do that. Take one quick gander and see if we can't find something. Any really good examples? Only Canada's been trending in a choppy way, more or less up. Something like this. This isn't great because it's in the middle of a range, but that's exactly where you want to pay attention to thrust failures. You expect them to fail in the middle of a range. And we see things like this, and with these lows here, and then you get a big bar down as we rip up all these minor stops, but then we get anywhere near these fairly significant lows, and you get one big bar, a small bar down, a bigger bar down, and then it retraces all of it. That is a railroad track, and it's in the middle. Railroad track is well, I'm going to credit Joe DiNapoli with it because he's who I learned it from. A railroad track is this kind of thing, and he would call a railroad track in the city because it's in here in the middle of all this congestion, versus a railroad track in the country, which is a big thrust and then a retrace with no structure around it. So his deal with this would always be Joe's a big Fibonacci guy, so he'd buy the first 382 retrace. He'd be getting in at this little bump right here, but I don't think he hangs on to his trades very long. I'm sure he would have been gone anywhere in here in the middle of this range. No way he would hold through retraces like this, even in the hopes of catching this kind of move, which is what happened. Alright, well, I'm going to look for some more examples of railroad tracks and thrust, and we'll make a new recording of that at some point in the future. Thanks for listening.